All right. Well, hello, everybody, and welcome to today's webinar, A Data-Driven Approach to Accelerated Underwriting with Term Life. I'm excited for today because Assurity is launching our new Term Life product, and it is ultimately designed for hardworking Americans that get up and go to work to maintain their current lifestyle. And I have found that there are two things that are really important to this demographic: time and money. And so with that, I want to ask you all a question, and we'll take a little poll here. And if you look at your clients that you work with, which of the following is the most important to your clients? So I'm going to throw up a poll. Go ahead and answer it. But what is the most important to your clients? Is it time? Is it money? Is it both time and money? Think of the clients that get up, go to work to maintain their lifestyle. What is really important to them? All right, we got a lot of the votes coming in. All right, I am going to go ahead and close the poll, and I'll go ahead and share the results. But as you can see, that 83% of you said that both time and money is important to your clients. And the reason I asked that question is because hopefully this product, once you learn a little bit more about it, you're going to find out that it could save them time and it could save them money with their insurance compared to Assurity's old term products. So I'm excited to jump in the details. We got a lot of exciting stuff planned today, so let's go ahead and get started. Hopefully you have had an opportunity to be on one of my webinars, but just remember that the goal of my presentations is to really challenge your thinking and give you ideas that you can implement immediately into your practice. So hopefully you can use this information, get out there, and make a sale yet even today. If you're not familiar with who Assurity is, I believe and Assurity believes that people should have the right to pursue their financial goals. And with this right comes responsibility to protect against the risks that might prevent someone from achieving these goals. And I am confident that Term Life aligns with this belief and will provide your client with the protection they want and deserve. So let's take a look at today's agenda. First, we're going to hit on the highlights of the term product, look at some of the nuts and bolts about what's going to be involved with the product. Then we're going to talk about accelerated underwriting, what that means, how that process works, and look at ways how your client might qualify for an instant approval or an instant decision. And then we'll look at some different sales ideas and sales tools that are available to you. We'll finish with some conversation starters and then also point out that for the rest of the year, there's still almost 2 months left, but you actually get 2 times credits towards Leaders Conference with this new term product. So when we were designing this product, there's a lot of things that we wanted to take into consideration. And our market research indicated that some consumers wanted an easier way to buy life insurance. If you think about the idea of filling out a long paper application, then going through additional requirements, and then possibly having to wait for 30 days for a decision, wasn't appealing, especially to the really younger and healthy generations. However, consumers also are concerned with the cost of their term insurance. And there's a lot of information out there available to consumers, and so it's not hard for them to go out and compare rates. So they wanted a convenient process, and they also wanted affordable rates, especially if they were younger and healthy. And so the goal of this product was to provide a competitive price product that also comes with a convenient process, especially for that healthy demographic. And I believe we really accomplished this with Term Life. We also found that another aspect that consumers don't like about paying for insurance is that hopefully they'll never use it, and they don't like the idea that they're going to have to pay for this coverage but never use it. And so we brought back the endowment rider benefit, or otherwise known as a return of premium rider, that if they don't use their plan, they would be able to get their premiums back. And so we're excited that that's still available, and we'll jump into what that means for the client. So let's take a look at some of the details of the product. As far as the basics are concerned and the issue ages remain the same. So it is available 18 through 75. One thing that I will point out is that we did lower the minimum face amount all the way to $25,000. And so if your clients are looking for that lower face amount, in the amount of term insurance, they have that ability. Also, I'll point out that this product is convertible. You just have to convert it prior to the age of 65 or before the last year of a 10-year term or the last 2 years of a 15, 20, or 30-year term. One thing that I like about this product is that depending on what risk class they qualify for, they actually will be able to convert it to the same risk class. That wasn't the case with our old product, the non-med term, so we're excited about that. So really promote those conversion options. And then also, we're really putting an emphasis with this product on the e-application, because if you use the e-application, that's what's going to go into the accelerated underwriting and potentially result in instant approval or an instant decision for your clients. And so we're really putting an emphasis on that e-app with this particular product. As I mentioned, this will also be available in 10, 15, 20, and 30-year terms. You can see that we will underwrite this up to $10 million a face amount, but really the numbers that I want to focus on in today's presentation is that $500,000 for ages 18 to 50, and then $350,000 for ages 51 to 65, because those are the face amounts that are going to allow the possibility for an instant approval. And so obviously if you get above those face amounts, it's still going to go into the system, but it's going to get kicked out and require the additional underwriting. The other thing that I want to point out on this slide is that if they are going for that instant approval process using the e-application, they can actually get that with not only the standard risk class, but also for the preferred risk class and the tobacco risk class. So it's not just limited to a certain risk class. They all could potentially, or as far as standard, preferred, or preferred plus, could all qualify for that instant approval using the accelerated underwriting. So we're excited for that. So really, when we talk about accelerated underwriting, here's really what we're trying to accomplish. First of all, we're going to use real-time data, and we'll talk about what that means, to eliminate lab testing and exams up to 50% of the qualified applications. So right now, we're anticipating about 50% receive that instant approval based on their qualifications. And we'll talk about what a qualified applicant looks like. All applicants are initially considered for instant approval if you use the e-application. However, there are going to be some criteria that's going to knock them out. Overall, this is going to reduce the cycle time and increase the placement ratio, because a good portion of your clients are going to know if they qualify immediately. And then also, by using the e-application, it eliminates those not in good order applications. And so we have all the information that we need to underwrite it. And so it eliminates a lot of the back end follow-ups that is often required with the life insurance process. So that's really what we're looking for. So let's take a look at what we mean by accelerated underwriting. So first, you're sitting down with your client and you submit the application via the e-app. One of the first things that the client will do is actually give us permission to start gathering that third-party data. So if you're familiar with an e-application, typically all the signatures are taken at the end of the e-app, but with this, we need to start ordering some of the additional information to help underwrite it, so we get that immediately up front. Paper and tele-apps are still available. And so if you don't want to use the e-application, you still can download the paper app. However, obviously, if you're doing a paper app, you're not going to be eligible for that instant approval, and it would go through the normal underwriting channels. But once you submit it via e-app, we get that signature up front. We start gathering third-party data. And you might be asking, okay, so what databases are you hitting? Well, we're going to obviously hit the motor vehicle report. We're going to hit the prescription drug report, and then we're also going to be hitting the MIB. And then there's also some other third-party publicly available information that we access as well. And so based on the information that we get on the e-application and these databases that we are hitting, then a result will be generated for the client. So one of three things will happen. One is it'll get approved, and so it'll say, congratulations, you are approved, and at that point, that policy would go to issue and would never hit the hands of an underwriter. It could get a decision that says it's going to be referred to underwriting. We'll talk about what that means and the differences between that. And then, or it can just say, sorry, unfortunately, you do not qualify for this, and you get a rejected or ineligible decision. But one of three things are going to happen. They're either going to get approval, which we're hoping to get about 50% approval, or referred to underwriting, or rejected. And obviously, the better information you provide on the application, the better it's going to increase your likelihood of getting approved. One thing that I will point out is that during the e-application process, there are going to be reflexive questions. So if you answer yes to a health question, it doesn't necessarily mean that it's going to get referred to an underwriter. It's actually going to have drilled down questions that's going to help you gather more information or ask about more information about that particular condition. And as a result, they still could qualify for the instant approval. We just have to get some more questions to find out what how severe the condition actually is. If the policy is approved or referred, then we will get that e-signature and it will get submitted to Assurity. Now, two things that I want to talk about issue and review is that, first of all, if it is approved as applied for, it'll immediately go to policy issue. If it is referred to underwriting, it may require something as simple as an underwriter review, or at that point in time, it could transition into full medical underwriting. So it just really depends. Obviously, if there's any discrepancies on the application and the third-party databases, then it's going to automatically get referred to an underwriter because we have to clean that up or figure out why there are discrepancies. And then obviously based on the health conditions, it might be simple as an underwriter just looking at it and saying, hey, this is all right. It might be that there needs to be a phone interview to clarify some of the information, or it might transition to full-blown medical underwriting. So it's very important that when you're asking the questions on the application using the e-app and you hit those reflexive questions, that you're putting in as much information as possible. That way it will eliminate a lot of the back-end underwriting that might be involved with this. But like I said, this is really exciting because for your young, healthy clients, or even your older, healthy clients, or relatively healthy clients, they can receive that instant approval and know immediately that they are going to qualify. So the question obviously comes up then, so, how will I know if my client qualifies for instant approval? And we have actually a document out available, and I'll show you where you can go to access this at the end of it. But a lot of the knockouts are going to be available on this document. But the biggest ones obviously are going to be the face amounts. So any face amount above $500,000, if you're 18 to 50, is going to get referred to an underwriter. And if you're 51 to 65, that's going to be $350,000. So as long as it's under those face amounts, you can qualify for that instant approval if everything comes out. Height and weight is also going to be a big knockout for people. Otherwise, review the quick reference guide. Some of the other things that are on the quick reference guide are going to be a DUI in the last 2 years. That'll knock it out. A bankruptcy, I believe, in either the past 2 or 3 years. If they do high-risk hobbies like private aviation or skydiving, or if they're taking prescription drugs for major health conditions like cancer, kidney disease, heart disease, stroke. So those major health conditions will probably transition to the fully underwritten or get referred to an underwriter. However, if they just have some minor health conditions, they still might qualify because remember, are those reflexive questions that will drill down and allow them to get that instant approval possibly. The other thing that I want to point out to you is that when you're doing the e-application, currently it does ask you to enter in the risk class that you are applying for. So, are you applying for standard, preferred plus? If it gets approved other than applied for, it actually will get referred to an underwriter just to get them to put their stamp on it. However, there is going to be an update this Friday that if it gets approved other than applied for as far as the risk class, it'll say other than approved and then tell what risk class it is. But for this week, if you're using it, be sure that you get that risk class right. If you have questions about which one they will qualify, I recommend you contact our new business contact center. They can do a pre-assessment, and then if you apply for standard and it comes back instantly approved for standard, then you'll know that. But just want to point that out, that will be in the next iteration of the update, which will be this upcoming Friday. So that's the highlight of the underwriting process, and I'm really excited about it. It allowed us to do this accelerated underwriting, allowed us to keep our premiums competitive. We looked at some different options, but really this was the best way that we could get the best pricing for the product, and I'm excited about it. We've had a lot of conversations with potential consumers that are excited about it, and then also agents that in our distribution that we currently have is excited about it as well. So I think there's a lot of good things to come. In addition to the convenient process, one of the things that I always talk about with Assurity, and I guess our term strategy or our term philosophy, is that we try to differentiate ourselves in ways that will take us out of the commodity term sale. As I mentioned earlier, a consumer can go out and get a term quote, and there's some people that are out there that promote the cheapest term out there. Assurity's goal is never to be the cheapest. The pricing on this is that we're going to be very competitive. It's going to be priced in most sales better than our current term options. However, we really put an emphasis on the living benefit riders that allow you to tell a better story than just a cheap term product, and really provide more value to the client because you're protecting additional risks. And so the first, living benefit rider that I want to talk about is the return of premium benefit rider. Now, when we filed this through the compact, it is actually called the endowment benefit rider, but ultimately it works the same as a return of premium in your client's eyes. And so it's going to be available on the 20 and 30-year term, just like the previous term products, but this really appeals, again, to those consumers that know they need the coverage, hopefully they won't use it, and would like their premiums back at the end of the term. It is going to be scaled, and so they will begin receiving a portion of the premiums back after the 6th year. But if they hit that end of the 20 or 30-year term, they'll get 100% of the premiums paid to the base policy and the return of premium rider itself. And what I always tell people and agents is you need to ask. Just ask the question when you're talking about term insurance, is that, do you want your money back if you don't use this at the end of the term? If they say yes, show them what it costs. If you don't ask and you don't talk about it, then I guarantee you that nobody will buy it. But talk about it, ask, and you'll be surprised of how many consumers say, hey, that's actually not that bad of an idea. They are willing to pay the additional premium in order to get those premiums back at the end of the term. The other living benefit rider, or one of the other living benefit riders that we're really putting an emphasis on, is going to be our critical illness rider. And if you're not familiar with critical illness, it pays a lump sum upon diagnosis of a covered condition. And the major covered conditions are going to be the heart attack, cancer, stroke. I think there's actually 11 or 12 different conditions that are actually covered. You can apply for up to $100,000 of critical illness benefit on this plan. And I believe that our critical illness really has 3 advantages over some of the other critical illness riders out there in the marketplace. So the first one is that Assurity's critical illness rider has the same 3-category approach as our standalone critical illnesses. So let's say that a client selects $50,000 of lump sum benefit. They can actually receive that benefit up to 3 times. There's 3 categories. There's a heart category, there's a cancer category, and there's a other category. And they can receive that $50,000 benefit once in each category. So that $50,000 actually could potentially pay out $150,000 if they were really unlucky and received one of the conditions in each category. The second reason that I think our CI rider really stands out in the marketplace is because ours pays in addition to the death benefit. So it eliminates any guesswork regarding how much the client will receive. If you sign up for a $50,000 benefit and you're diagnosed with one of the covered conditions, you're going to receive that benefit amount. It also keeps the death benefit in place. And so if you think about that, when you wrote this plan, they wanted a certain amount of death benefit. And I know that there's some critical illness riders out there that accelerate the death benefit, but my philosophy is, why would you want to accelerate a death benefit at a point in time when you're no longer eligible to qualify for life insurance? So our CI rider, remember, pays in addition to the death benefit. It takes out all the guesswork as far as how much they're going to receive, and it's going to keep that death benefit in place. And I really think that that's a huge advantage to your client. And finally, the third advantage of adding the CI rider is that we pay you for it. It is going to be an additional premium because it is going to pay in addition to the death benefit, but you'll get paid for the additional premium, so the client is better protected and you're going to make more money. And so it's a win-win for everybody involved. And then the third living benefit rider that I want to talk about is our disability income rider. And if you're not familiar with disability income, remember it pays a monthly benefit if the insured becomes disabled due to an injury or sickness. Actually, there's a full-blown disability income rider, or there's an accident-only DI rider as well. But the reason I like this rider is because it removes a lot of the moving parts associated with disability insurance. There's a lot of agents out there that are afraid to talk to their clients about disability insurance because they don't fully understand it, they feel it's too complicated, and they think there's too many moving parts. Well, I disagree with that, but if that is a concern for you, then this rider will eliminate a lot of the moving parts. First of all, there's only one occupation class available, so as long as it's an eligible occupation, then you don't have to know if they qualify for a 1A, 2A, 3A, or 4A. Also, everybody's going to get a 90-day elimination period and a 2-year benefit. So it removes all those questions about how long you want it, how long you have to wait. It's just, this is what you get, so all you have to do is check a box and list the monthly benefit that individual wants. So it's a great way to protect against that risk of becoming disabled and being unable to go to work. So like I said, the goal of these riders is really to differentiate yourselves, take you out of that cheap commodity term sell, and hopefully give you a better value proposition to your clients than some of your competitors out there in the marketplace. So let's look at a couple of case studies of how we can use these living benefit riders. You can see here that we have Amanda. She's 27. She's married her college sweetheart, Lucas. She's earning $47,000 as an instructor. Lucas is still finishing up grad school, but the couple does depend on both incomes for the recent home purchase and paying off those dreaded student loans. As you can see, they both have student loans, and they also have a little bit of credit card debt. The savings are small because most of their income is going to the house payment. Amanda does have a little bit of life insurance, 1 times her salary at her employer, but she realizes that that's not enough. Now, one of the things that you have to realize is that Amanda is a millennial, and she is busy, and she doesn't want to deal with a long application process. Also, she is very healthy, so the agent is very confident that she's going to qualify for the accelerated underwriting. And so with this extra coverage, if something were to happen to Amanda, Lucas would have a lump sum benefit that would help him finish his degree and remain in the house if something were to happen to her. And they like the idea of getting back 100% of their premiums paid if something were to happen to, or if nothing were to happen to them and they get to the end of the term. And so what was offered in this solution to Amanda is they offered a $250,000 30-year term. She qualified for Preferred Plus, non-tobacco. They added the ROP rider, which you can see only in this particular situation only added about $5 to the premium. And so for $21.10, they were able to get, or Amanda was able to get $250,000 of coverage on a 30-year term. And if she doesn't use it, which she probably won't, the chance of her dying during those 30 years are very small. And if she doesn't use it, guess what? She gets her money back at the end of the term. And so you can see this is very affordable, especially to those millennials that might think that the cost of insurance is going to be high. Because a misconception out in the marketplace is that people think life insurance is going to be expensive, but in this demographic, it's very affordable, $20 a month, $21 a month, and if they don't use it, they can get their money back at the end of the term, which is awesome. So let's look at sales idea number 2. In this one, we have Chris, age 40, married to Amy, age 38. They have lived in their home for about 10 years. However, Amy's dad recently passed away from a long battle with cancer, and so they can see the financial impact that being diagnosed with cancer or even a heart attack or stroke put on the family. And so they want to make sure that their family is going to be financially secure, even in the event of a premature death or even in the event of critical illness. And so what they ended up doing is they basically have purchased $200,000 of life insurance to cover the remaining 20 years on their mortgage, which is approximately $1,250 a month. And we also added a $30,000 critical illness rider. And how we came up with that $30,000 is basically if you took their monthly payments of $1,250 and times it by 24 months or 2 years, that equals $30,000. And so if they were diagnosed with that heart attack, cancer, or stroke, they would receive that lump sum benefit, and they would have enough to cover the mortgage payments for 2 years. So when you're talking about that critical illness rider, the key needs to be attachment. So whatever you're attaching the life insurance to, maybe it's income replacement, then attach the CI rider to replacing their income just for a shorter amount of time. In this particular situation, it was being positioned as mortgage protection, and so we attached it to paying the mortgage for 2 years. Also, they were healthy as well and qualified for the instant approval with the accelerated underwriting as well. And so for Chris, you can see that the life insurance, remember he was a little bit older, but still very affordable with $23.14 a month. Then we added that $30,000 CI rider for $20.28. So the total cost of this is $43.32. So very affordable for Chris, and he will get protection for the next 20 years. And we also added on his wife, Amy. Again, she's going to be a little bit less expensive because she's a female, and also she's younger. And you can see that that $200,000 for her for 20 years costs $16 a month, or $16.53 a month. And we added the same $30,000 CI rider as well. And so the total for her is $32.66, very affordable. And you can see that we covered both of them in the event of a premature death with the term insurance, and we also protect against the risk of being diagnosed with a heart attack, cancer, or stroke with that CI rider. So we gave them more protection, and they're happy, and they're better protection. And so really it's a win across the board for sure. So with that, you know, they gave the objection about the premiums. Going to be hard to, you know, prevent them from continuing to save money. But as you can see, it's very affordable. Also, they were concerned. They heard that life insurance is a hassle to get, but they liked the idea of the accelerated underwriting. They were relatively healthy, and so they went through without problem. So conversation starters for you to go out and start, I guess, having discussions with your clients. You know, you can always ask them, did you know with recent changes in life insurance products, you may be eligible for greater coverage for less cost? As I mentioned, this new term product at Assurity is going to be priced more competitively than our previous term product, the non-med term and the term 350 plus. So it's just going to be more cost effective. Also, you can always ask the question, does your current life insurance plan provide any living benefits? If they say no, then you can pivot to either the return of premium, the critical illness rider, or the disability income rider. And then another question I like, would you like to get your money back on your insurance plan if you never use it? And most people are going to say yes, and that will allow you to pivot into the return of premium or endowment benefit rider conversation. So with that, we have a new tool available for this product. Go out and visit assuritytermlife.com for more details. Out here, you're going to find marketing material, consumer brochures, case studies that we covered today. Also, this webinar will be recorded and posted out on this website. So a lot of great information out there. So write that down, go out and visit it, and you can begin accessing information as well. This product is up on the illustration software, so you can go out and quote it if you want. You actually still can submit the old term products until November 20th, so both products are out there and you're available to quote it. But I'm going to just you know, throw this out there. I think you're really going to like this new term life, and I recommend you taking a look at this because you can qualify for that accelerated underwriting aspect of it and possibly get that instant decision in the event of using the e-application. So with that, I want you to remember 4 things about this term product. Remember the process, okay? The process is going to make it convenient for your healthy or relatively healthy clients to get that instant decision. So remember that accelerated underwriting, you fill out the e-application, it hits submit, you get that signature up front in the process so we can order the MIB script, motor vehicle, and hit other third-party databases. Hopefully those all match up with the application, and we can give an instant approval. If it isn't an instant approval, it will either get referred to underwriting or it'll get rejected. If it's referred to underwriting, it doesn't necessarily mean that it's going to go and do full all-out underwriting. It just depends on what the discrepancy is. Also, remember, this is going to be cost-effective. It's priced very competitively in the marketplace, and we're excited that from a cost aspect. Remember to customize this with the living benefits, and really talk to your clients about protecting against multiple risks. And then finally, it is going to be convertible as well. And so remember that this product, you can convert it prior to age 65 or before the last 2 years of a 15, 20, or 30-year term, or the last year of a 10-year term. So those 3 things. Remember the process, the price, the customize with the living benefits, and then the fact that it is still convertible. So with that, as I mentioned at the beginning, there still are 2 months left to qualify for our Leaders Conference in Australia. If you haven't started, it might be tough to do it only with term insurance, but if you're relatively close, you actually get double credit for this new term product for the rest of the year, which is exciting. With that, are there any questions, Brandon, that are
out there? Most of the questions answered. A lot of them are questions as far as California. Unfortunately, right now it is not approved in California. We're in the process of getting it approved. And the questions that if they weren't answered, we will be reaching out to you as well to make sure we get those answered for you.
Okay. Well, perfect. Well, hopefully you found this beneficial, and hopefully there's a couple of things you can take out here and begin using immediately with your clients. If you have any questions, please reach out to your regional sales team. They will be following up with everybody to see if you have any questions and see what we can do to help you start utilizing this immediately. So I'm excited for this new term product. You should be too. And so I appreciate your time, and I look forward to discussing the benefits of this product with you in the future. So with that, thanks everybody, and that concludes our presentation.